Welcome back to another week of Stocks in Review for the upcoming week. For those of you that took my advice last week, there were some pretty good gains as of Thursday's close. VMware was up nearly $5 from the close on Friday. Northern Dynasty Minerals was up a whopping 18%. Alibaba was up $8.50 a share, and Apricus Biosciences was up an incredible 18+% a share from last Friday's close. This week's extra bonus topics deal with a popular head and shoulders chart pattern and the important Dragonfly Doji, another candlestick pattern following up with last week's gravestone Doji. In news that can affect the economy, at a recent rally, the president mentioned that if funding wasn't approved for a wall between Mexico and the US, that he would let the government shut down soon by not raising the debt limit. Not great for the stock market, especially if Congress calls his bluff. Janet Yellen will be speaking at the annual central bank conference Friday in Jackson Hole, Wyoming. Investors will be looking for any indications on future Fed moves. One of China's leading papers indicated that the government was furious with the latest sanctions imposed on them by the US earlier this week. Watch for some retaliatory move in the weeks that follow. In cryptocurrency news, Ethereum was the volatile digital currency of the week, much more so than Bitcoin. Ethereum ranged from a low of $292 up to a high of $337 for the week. Bitcoin had a low of $3,822 and a high of $4,365 early Thursday evening. I am up about $5 so far for the week. I keep missing the dips because of sleep or work getting in the way. On watch for the new week, I have Northern Dynasty Minerals, Apricus Biosciences, and Synergy Pharmaceuticals. I mentioned earlier the impressive moves on both NAK and APRI. I really think something big will pop on these very soon, especially because of recent gains and how they've held up so well. With SGYP, they have a great product, Trulance, that treats CIC. It just received FDA approval in January and is a superior drug to the current standard of Linzess, which has undesirable side effects. The stock has taken a real beating, but it doesn't seem to want to go down much lower than the 280s to the low 290s. Summer isn't the best time to promote a new drug, and I believe that they don't have enough reps in the field, so I expect an uptick starting in September. There's also a business update on September 7th. Most people don't believe that anything much will come out of it, but you never know. Unfortunately, there's a lot of unhappy bag holders here, but if you can get in under $3, you might make yourself a little money in the short term. For next week, a new stock that I'm suggesting to you is Array Biopharma, ticker symbol ARRY. This Boulder, Colorado firm has over 200 employees and has a variety of cancer drugs under development and a number of good established partnerships. The share price is up over 20% during the last month or so, and next week on Wednesday or Thursday, a major catalyst will come to fruition: abstracts from the European Society for Medical Oncology. This should send the price much higher. This week, a number of large block purchases were noted. Definitely a bullish sign. Short interest is extremely high here too. If the stock breaks through the $10.30 resistance level, it should be an easy ride to $12 or more. This also would not be a bad long-term hold either. I conclude with a penny stock that just appeared on my radar: Dexterra Surgical, ticker symbol DXTR. This Redwood City, California company manufactures and designs stapling devices used for minimally invasive procedures, both domestically and abroad. The company markets the only automated anastomosis device used for coronary artery bypass graft surgery on the market today. They're expecting FDA approval any day now on their latest device filed almost 3 months ago. They have a working relationship with B. Braun Surgical for their microcutter distribution in Spain and expect to enhance that relationship this fall. They really have a lot of great things going on, and for just 32 cents a share, I think it's one of the best risks you can take if you have some cash sitting around. Now keep in mind that penny stocks are more risky, typically, so don't use the mortgage payment on it. Let's now talk about the popular and reliable Head and Shoulders chart pattern. As you probably can guess, the name comes from the shape it makes. It looks like a head with two shoulders. The nice thing about it is that it works for every time frame you use. No matter what type of investor you are, it's something worth getting familiar with because it will warn you of changes coming up in your investment. Head and Shoulders is considered a reversal pattern, which means it's warning you that whatever has been happening is about to change. So if the stock that you're holding has been going down, this pattern would signal that your stock will start on an upward trend. There are two types of these to watch for. If the stock has been going up and you see the Head and Shoulders pattern appear, it will likely begin to fall. It's important to note that this pattern has to happen at the top of an upward trend. That's why they sometimes call it a top Head and Shoulders pattern. An inverse Head and Shoulders pattern is a signal that the stock will begin to go up if you see this appear after the stock has been trending down for some period of time. You want to confirm the pattern once the neckline is broken, in other words, after the formation of the second shoulder. Whenever you see a neckline, it's either considered a level of resistance or a level of support. Therefore, if you see this pattern, the charts are telling you that there is a deterioration or weakening in a trend in either direction. If there's a lot of volume on the day, this pattern is even more reliable and should be watched for carefully. If volume is lighter on the neckline break, there's a good chance that the price movement will go back toward the neckline. I suggest you look at your favorite stocks this week and use the free TradingView information we provided in our video from last week about gravestone dojis, and get familiar with both variations of the Head and Shoulders patterns. It will become second nature to you. As a matter of fact, it'll jump out at you with no effort whatsoever. Finally, we conclude with the Dragonfly Doji, another candlestick pattern that looks like an upside-down gravestone doji. This is a reliable indicator that your stock is at a major turning point. So, if it's been going down and you see this doji, it's close to a turning point. You might say to yourself, what's the big difference between the two other than the way it looks? Well, typically, a Dragonfly Doji occurs at the end of a downward trend indicating that the stock will go up, and the Gravestone Doji appears at the end of an upward trend indicating that the stock will likely go down. Even though both can occur at the end of an up or downward trend, they usually don't. And here's something even more interesting. If you see a Gravestone Doji at the end of an upward trend, and then you see a Dragonfly Doji appear before the stock starts to go down, which, by the way, this is extremely rare, that shows extreme indecision in the stock. So, most analysts will tell you to follow the most recent doji or the second one for direction. This would therefore be considered a somewhat bullish indicator. Hopefully, you found this presentation informative. Please remember, investing in the stock market carries risk. Never invest more than you can afford to lose or not have access to for an extended period of time. If you like what we do, please click subscribe and like. Have a great week.